Money has always been presented as a symbol of trust. We are told that central banks exist to protect that trust, to ensure stability, and to safeguard economies from collapse. But beneath the polished speeches and carefully worded reports lies a darker reality. A reality where debt itself becomes the most powerful laundering mechanism in history. This is the story of how central banks turned debt into a disguise for instability, and how nations across the world became trapped in a cycle they cannot escape. The origins of this secret stretch back centuries. In the early days of banking, money was tied to gold, a tangible anchor that limited reckless expansion. But as wars grew costlier and empires demanded more resources, governments discovered a trick. They could borrow endlessly, issue bonds, and let central banks absorb the debt. What looked like stability was in fact the laundering of deficits into legitimacy. Debt became the mask that hid financial weakness. By the 20th century, this trick had evolved into a global system. The Federal Reserve in the United States, the Bank of England, and later the European Central Bank all perfected the art of debt laundering. They presented it as monetary policy, as a tool to manage inflation and growth. But the deeper truth was that debt was being recycled, repackaged, and legitimized. Governments spent beyond their means, and central banks transformed that excess into stability. The rise of World War II accelerated this system. Nations borrowed at unprecedented levels, and central banks became the silent laundromats of global finance. Debt was no longer a burden, it was the fuel of reconstruction. The justification for new institutions like the IMF and World Bank. But hidden within this reconstruction was a paradox. The very debt that rebuilt economies also enslaved them to perpetual repayment. The breaking point came in 1971. President Nixon severed the dollar's link to gold, unleashing a new era of fiat money. Now, debt could expand without limit. Central banks no longer had to balance money against gold reserves. They could print, borrow, and launder debt into the illusion of prosperity. This was the moment when stability became a performance, not a reality. The fallout was immediate. Inflation surged, currencies fluctuated wildly, and nations scrambled to adjust. But central banks had discovered their ultimate weapon. By manipulating interest rates and bond markets, they could disguise instability as control. Debt laundering became the invisible backbone of modern economies. Failed fixes only deepened the problem. Every crisis, from the Latin American debt collapse of the 1980s to the Asian financial crisis of the 1990s, to the 2008 global meltdown, was met with the same response: more debt, more laundering, more promises of stability. Each bailout, each stimulus package, each quantitative easing program was another layer of disguise. The system survived, but the cracks widened. Today, the numbers are staggering. Global debt exceeds $300 trillion. That is more than 3 times the size of the world's economy. And yet, central banks continue to present this as stability. They argue that debt is manageable, that interest rates can be adjusted, that inflation can be controlled. But the truth is that debt has become the greatest laundering scheme in history. Modern parallels are everywhere. When governments borrow to fund wars, social programs, or corporate bailouts, central banks step in. They purchase the debt, recycle it, and present it as stability. But behind the curtain, the laundering continues. Debt is shifted from one ledger to another, hidden in complex derivatives, buried in shadow banking systems. The illusion persists, but the instability grows. Shocking data reveals the scale of this deception. The United States alone owes more than $34 trillion. Japan's debt-to-GDP ratio exceeds 250%. Even emerging economies are drowning in obligations they can never repay. And yet, central banks insist that this is sustainable. They insist that debt is the foundation of growth. But in reality, debt is the disguise that hides collapse. The repeating pattern is unmistakable. Debt expands. Crisis erupts. Central banks launder the debt into stability. The public is reassured. And then the cycle begins again. Each time, the stakes grow higher. Each time, the disguise becomes harder to maintain. The secret history of debt laundering is not just about numbers. It is about control. By laundering debt, central banks maintain power over governments, corporations, and individuals. They dictate interest rates, currency values, and the flow of capital. They present themselves as guardians of stability, but in truth, they are the architects of dependency. The origins, the rise, the breaking point, the fallout, and the failed fixes all lead to one conclusion. Debt laundering is the hidden engine of global finance. It is the trick that keeps nations afloat while ensuring they remain chained to central banks. It is the disguise that presents instability as stability. And it is the darkest secret of modern economics. The story is not over. The cycle continues. And the next crisis will reveal just how fragile this disguise has become.